Hey everyone, Anthony Gerbi from Stein Financial Group here with my Thursday thoughts. And this week, I want to do a little bit of a recap of an event we recently had, which was our mid-year market update. And I wanted to give you my top 3 takeaways from the mid-year market update. All right, well, let's get started. Number 1, very simple. Halfway through the year has been going pretty well. Investment-wise, the market is up. The bond market is also up in spite of rates that have continued to rise this year. We'll get to rate rises maybe in a later item, but the news has been good. Now, that does not necessarily mean that we are back to our all-time highs, which most likely were set in the beginning of 2022. So my number 1 takeaway, besides the fact that it's been good this year, is that we expect it to be, and of course this varies by person, but we expect it to be about 9 to 12 months before most people are back to their all-time highs with their investments. It could be sooner, it could be later, but from the start of this year, there were a lot of people that thought 18 months was a good time frame from the start of this year, and that would put us about 9 to 12 months away right now. So we're on pace anyway. Number 2, very simply, interest rates we do expect to continue to go up slightly, but we are very near our peak. And that is a good thing because, number 1, that means inflation is getting under control, which is what the whole point of raising interest rates was. But 2, it means much more stability for the bond market. So those conservative investments that were really rocked around in 2022 have been much better this year, and we expect them to do better going forward as well. So that's great news. And third and finally, and this is maybe more of something I look at every day than something you might look at every day, but another take-home point, and I take this to heart, is we need to start looking, if we haven't already, and most of you that work with us have, outside of the United States for investments. That does not mean you're going to every different country and you're plucking a few companies and buying their stocks, but a good, well-diversified portfolio should have a portion of its investment in international stocks. We believe this. There are numbers to point in that direction. And the mid-year market update, our presenter hammered that home even more by saying, look, when we're looking at the opportunities that are out there, that is one of them. And that is one that's being underutilized by the average investor. So with that said, those are my 3 takeaways from last week's mid-year market update, and we hope to see you in the next video.